All right, SOFI update here on the 12th. Let's look at the overall picture we got here. So on the weekly, we held the 50 and the 200. On the daily, we tapped the 200 DMA, bounced off of it. Nice to see. What this tells you is that we are so close to these moving averages and farther away from the 20 and the 50. Tells you the path of least resistance is to go up from here. Because we come down here, we have support. If we go up here, there's no resistance until we get back up here to the 20 here at 1409 as far as moving averages go. So I think that this move is likely finished. We had a nice bounce the last couple of days from 1088 all the way up here today to 1210. So the overall move that I think played out was a WXY move. I went over this in the last video. This is W, X, A, B, 1, 2, 3, 4, 5, Y. So WXY. The fact that we held the 200 DMA and we held those weekly moving averages tells me that it's very likely this bottomed. This also hit the 1.61 fib pretty much exactly. It went a little bit past the target based on this being, no, it hit it pretty much even too. So I guess around 11 bucks hit it pretty much exactly as well. So I think that this is finished. This wave is finished. Is this the end of the fourth wave? Not so sure about that. It could be. It's already retraced to the 0.5 fib. So if we go back down here from the second to the third wave, this almost came down to the 0.5 fib. It's a pretty big retracement. So yeah, it could definitely be finished. It crossed the midpoint of these parallel lines. The only reason I'm not sure about that is because this took over a year and we're only about 7 weeks into this correction. So you would think that it would take at least half the time of this, which is about 6 months. That would take us into like July or August. So if that's the case, we have two different scenarios that are going to play out. We're either going to get the corrective move up here to anywhere between 1419 all the way up here to 1648. I think this gap is pretty much out of play. I don't think we're going to go that high, but I think anywhere from 1419 in that area, probably within the, I would say probably by like mid-May, we can make it up into this area. There's a lot of different ways it could play out. I'm just going by the time length of this. It's about 7 weeks. So I would expect about a 7-week retracement. And if that happened, it ends up being a corrective move. Let's say we go to, let's just say the 0.61 fib. 0.61 fib is around 15 bucks. Then I would expect something potentially down here to 9 bucks. The reason that is kind of iffy on this is because we did hold these moving averages. It's a perfect time for us to take off and go and make a fifth wave. Obviously, it's going to depend on the overall market. But the two ways it could play out are that corrective move up here down to 9 bucks, or we just start going higher from here. The third scenario I think is very unlikely, and that is that we just go lower from here. If that were to happen, it would be a 333. It would be W, X, Y. This would be double X, and we come down here to 9 bucks. If we look at the length of this wave right here, this full wave, just currently where we're at right now, you can see it takes us down here to 9 bucks. Not saying it can't go higher. It might come up here to fill this gap at 1240 if this were to play out and then go down. If you look at the retracement on the last one, it was a little bit short of the 0.338 fib. Where is it at right now? A little bit short of the 0.38 fib. So if this were to play out, that means that SPY and QQQ are going to tank, and they're probably going to go down a lot lower. They're probably going to go down to like 545, 550. But they might go up a little bit into the end of the week and then fall off next week. However, we don't really have any catalysts, I don't think, next week. So tomorrow we have PPI. I personally think that PPI is going to be bullish just because the market needs to hold some key moving averages. SPY needs to hold the 50 on the weekly. If it sells off again and finishes the week below 563, that would be a big red flag. So yeah, you have three scenarios from here. I would say the two where we bottomed here make the most sense, but you do have that possibility of it being a 333 and coming straight down here to $9. If that were to happen though, I would say that would be the end of the fourth wave. We'd be done. I don't think that if you came all the way down here, you're bouncing and coming lower. It's done. But if we bounce from here, we still have the opportunity for this. Or we just go up here and make new highs for the overall fifth wave. It's going to depend on the overall market. Like I said, we've crossed the midpoint, but this was a year long and we're only about 7 weeks into it. So timing wise, it makes more sense to see something like this and then go up. Not saying it's impossible though, it's already broken halfway through, so it's definitely possible that this is the end of the fourth wave as well. It's just going to come down to what kind of move we get from here. So far, so good. Nice bounce from the lows. This could be some kind of nested move here. But if I were to guess, it does look pretty corrective to me. Overall, you have a lot of, you look at impulse here and it retraces all the way back down into this wave. You're coming back up here. This looks pretty choppy. If it comes back down here, then you're going to be thinking it's definitely a corrective move. So I'm not going to get into the short-term time frame right now. We'll just see what happens on the higher time frames. Right now you have gaps at 1240. You have a gap at 1334. And gap up here at 1611, and the gap at 1788. Where do we need to get to in order to invalidate that move of a 333? I would say if we came all the way up here, let's say we get up here above, well, we got 20 way up here at $14. Let's look at the weekly moving averages. That's not going to help out either. So there's not really any moving averages we can get above. I would say, though, if we came all the way up here to 1338, be a pretty big retrace up here to 1338. I think that the move down here would pretty much be invalidated. So if it comes up here to 1240, I think it's still in play. But anything back up here to like 1350, I would have a hard time seeing it be a double X move. I don't think it's going to go like this. That would just be too much, in my opinion. Especially the fact that we would be way above all those moving averages and have to tank another, like 33%. So I don't think that's probably going to happen. Get above 1350 or around that range, you're probably not going to see a move down. That means we're 100% in a corrective move or an impulse higher. So yeah, right, basically the summary of this video is that we're in good shape here based on the moving averages. Very good chance that we bottomed short term and we're going to see a corrective move here or new highs probably over the next 6 months or so. So that's all I got for today. I'd be careful selling those covered calls or buying puts here. You're at the bottom of the range. Not even on just the daily anymore. You're getting to the bottom of the range on the weekly now. So it's not the spot to be selling covered calls or buying puts, in my opinion. And the option flow was pretty bullish when I looked at it last as well. So that's my thoughts on SOFI. I'm pretty bullish from here, and I think there's very little chance that we go down and break the lows anytime soon. Probably going to retrace to at least 14 to 16 bucks. That's it. Leave a comment, like, subscribe for more updates, and I'll catch you in the next video.